Hello and a very good afternoon to all of you. On behalf of Corporate Capital Market Limited, better known as CAPM, it's with great pleasure that I warmly welcome all of you to today's webinar, Debentures as a Wealth Strategy, the themes of safe, stable, and smart investing. In an environment where we as investors are constantly looking for reliable and well-structured avenues to grow and preserve our wealth, debentures continue to stand out as a trusted investment option. And through this session, we aim to explore how debentures provide stability, a steady income, and also a smart approach to long-term wealth creation. And we are very truly privileged to have with us today an esteemed panel of industry experts who will share their knowledge, insights, and practical experiences. Please feel free to message these individual named questions on the participants on the chat, and we look forward to address all of them. And again, thank you for joining us today, and we look forward to an engaging and thought-provoking discussion.
Thank you, Mr. Shahan Senanayake, for your warm welcome. Let me introduce our first distinguished speaker, Ms. Vinda Jayasekara, Chief Executive Officer Designate, Colombo Stock Exchange. Ms. Vinda Jayasekara is the CEO designate of the Colombo Stock Exchange with over 20 years of experience in investment banking and asset management. She was previously Chief Investment Officer at NDB Wealth Management, overseeing assets of over 380 billion LKR. She also has international exposure at Lehman Brothers USA. She is a CFA charter holder and a Fulbright scholar with a MSc in Finance from the University of Illinois, USA, with a medal for academic excellence and a first-class honors in Bachelor of Science in Civil Engineering from the University of Moratuwa. She also lectures on financial markets at leading academic and professional institutions. Over to you, Ms. Jayasekara.
Thank you very much, Tirani. I'll share my presentation. So thank you very much. Good afternoon to everybody. Thank you for having me here. So I'm going to talk today about debentures as a strategy, which is the topic of the day. And why? So what I'm going to cover within the next few minutes, hopefully, is going to be what is a debenture, an introduction to debentures for those of you who are not aware, as well as how you can add debentures as part of your investment portfolio, as part of your wealth strategy, right? So when you think about debentures, this is a investment strategy to enhance your returns. And one thing that I wanted to start with was really to help you understand or to distinguish between the difference of investing and saving. Because typically, a lot of us are very used to saving, right? And when we talk about investing, sometimes we use these two terms together, but actually they're two very different terms. So when we talk about investing, for example, savings, for example, savings is about putting money aside, right? So we keep aside money typically in a bank account. So these are savings accounts, our fixed deposit accounts. And generally when we save for a goal, a particular goal, right? So sometimes for emergencies, certainly, and as well as, like, for example, paying for a car, or a down payment on a loan or for a house or something like that, right? And other emergencies are day-to-day requirements, which is why part of our money we save in savings accounts, as well as part of it we save in fixed deposits, right? And why most of the time we keep our money short term, because typically when we save, it's for smaller short-term goals that are happening in the near future, right? So when we think about saving, actually it's low risk and it earns an interest, but typically because it's low risk, interest rates are also lower, right? Versus when we think about investing, investing is actually a longer term exercise. Actually, this is using your money with the aim of making it grow, right? How do we look to make our money grow? Is by buying assets that can increase in value, right? For example, stocks, bonds, debentures, property, right? So these can be financial assets like your shares and your debentures and so on, as well as real assets like land and property, right? Or the same shares or bonds or whatever you can invest through a mutual fund. The same investments you can make through a mutual fund, which is why, or unit trust fund as we call it in Sri Lanka, which is why I've added that there as well. But investing is for our long-term goals. And that's very important to understand, right? This is about, saving our money or looking at retirement. So planning for retirement, paying for, let's say, if you have kids, for your kids to go abroad and study. These are long-term goals that we want to achieve. And to be able to achieve these goals and, like, for example, have a good retirement, we need to be able to maintain the same lifestyle. That means our investments need to beat inflation, right? So when we think about investing, we are looking at longer waiting periods. Investing involves risk because we are buying assets, financial assets or real assets. Prices of these assets can go up and down. When I say financial assets, why are stocks or bonds assets? Like, for example, in stocks, we're actually owning a company, right? We're becoming an owner of a company. So we're actually buying an asset. And that involves risk because the company can do well, it might not do well, share prices might go up, it can come down. Same way for debentures or bonds. And typically, though, because of this risk involved, there is potential for higher return. Potential for higher return. And let me show you some numbers actually. So before I go, just to say, remember, saving is for short term. It's for what's around the corner. Investing is for the future. It's long term. So looking at a few numbers, right? If you look at, for example, I've plotted the numbers of the last 1 year return, 5 year returns, 10-year, 15-year, 20-year returns of, this is the AWDR, the average weighted deposit rate. So this is a rate published by the central bank. This is all the deposits, right? Including savings accounts plus fixed deposits. What's the average rate, average return, right? So I've looked at the return, for the last 1 year, the last 5 years. These are simple returns. And you can see the returns are in the range of about 8%, right? Look at our average inflation levels. Our average inflation levels are in the range of 15%, 8%, 29%. Last 20 years, our inflation has averaged roughly around 9%. So you can see just by saving, I can't beat inflation. And if I can't beat inflation, the problem is I won't be able to achieve the retirement that I want to achieve. My retirement, I won't be able to maintain the same status that I have now, right? So if I want to beat inflation and to live better after I retire, after I'm not earning a stable income, I need to be able to invest better, right? So what are good investment instruments? You're looking at longer term instruments, like, for example, your treasury bonds, your debentures, shares, right? So I've plotted the returns on average for each of these for over these holding periods. And you can see, today we're talking about debentures, but any of these investments, you can see pretty much beat inflation, other than the last 5 years where we had that very high inflation, and even then equity, you can see, has beaten inflation. It's certainly better than at 8.7%, right? We are very close to beating inflation, even when we look at our average returns. through these longer term investments. Now I keep saying longer term investments, right? For those of you who are not too familiar with debentures, let me just give you a quick introduction in terms of what are debentures. Actually, debentures are just debt. They are loans taken by companies, long-term loans taken by companies to raise capital. Right? So if you think about debt, right, I can go to a bank and I can take a loan. So can a company. But a company also has the option to come to the capital markets, right, like this Colombo Stock Exchange, and raise money there. So they will borrow money. And who are the people who lend money? That would be the investors. Investors would lend the company money. And so you have your investors as well as the company who is borrowing money. And this is in the form of corporate debt, or commonly we call these debentures. So the company that's borrowing the money, in common terminology, we call them the issuer. And once you lend money to this company as an investor, when you lend money to this company, you become a creditor of the company. And just like in a normal loan, you have to get paid back. You have to get interest, right? If you go to a bank and you take a loan, you should get interest. And if you go to a bank and you take a loan, you have to pay back the capital. And the same way, the company has to pay now you interest. They have to pay you interest as an investor, and they have to pay you your capital back. So in debenture terminology, these two we distinguish as interest, we call them coupons. Coupons. So as well as the capital that the company pays back is what we call the face value of the debenture. So the debenture is simply a loan. The interest rate is known as your coupon, and the capital is known as your face value. And the other thing is, when you think about a loan that you take from a bank, you would know typically if you take a loan from a bank, it has standardized features, right? For example, you will pay an equal amount every month. Part of that equal amount would be interest, part of it would be capital. But when you come to the Colombo Stock Exchange and you raise a debenture, the debenture would also have standardized features. Those features won't have equal payments necessary. Your interest rate can be fixed or floating. So if it's fixed, then you'll have equal repayments coming in. If it's floating, the rate will keep on changing depending on the benchmark that the rate is referencing, right? So for example, if we say the rate is going to float according to the treasury bill rate, if the treasury bill rate changes, then the rate of return that you get, or sorry, the coupon that you get will change. Also, the capital you will get back at the end of the period. Right? So it's not that you pay part of your capital back, but the capital you will get right at the end of the period at maturity. So you get payments on equal periods, for which is called the coupon or your interest, right? Which can be, your payment period can be monthly, can be quarterly, semi-annual, or annual. And at the end of the period, you get back your face value. So how will this happen? Because these debentures, you can have listed debentures as well as unlisted debentures. But we're talking about the listed debentures that are listed on the Colombo Stock Exchange. Because they're listed, the interest payment will be directly credited to your bank and the bank account that is provided to the CDS, the Central Depository System. So looking at the differences between debentures and equity and debentures and fixed deposits versus equity, debentures are lower risk instruments, right? Because they are loans. When you talk about shares, you are an owner of a company. When you buy a share, you become an owner of a company, right? Versus when you buy a debenture, you become a creditor of a company because you're lending to the company. A debenture signifies indebtedness. So therefore, you become a creditor of the company. You don't have any ownership rights. You don't get any dividends. If the company does well, you don't get to participate in its profitability. But for that, you get more safety, right? how do you get more safety? In case something bad happens with the company, right? Something goes wrong and the company is not able to pay you back, you have priority in terms of claims. Unlike a shareholder has to wait for everybody else to get paid. Versus in a debenture, you have priority. Your claims will come before the shareholders' claims, right? So that means there is more safety in debentures. Also, unlike deposits, debentures can be traded just like shares, right? Now, if you think about a deposit and a debenture, a fixed deposit obviously is not tradable, right? You put your money and you hold it. A lot of people, some of you might be investing in debentures. Most of the time, you will put your money and you will hold it. You don't need to. Actually, these debentures are listed on the Colombo Stock Exchange. So just like equity, you can trade the debentures. Just like equity, if a debenture is issued at 100 rupees, because generally debentures, most of the debentures, about 98% of debentures in the Colombo Stock Exchange are issued at 100 rupees. So the issue price that you pay for one debenture is 100 rupees. So you can trade it. You might be able to sell it at 102 rupees, 110 rupees. It might have, the prices can come down just like shares to 90 rupees, 95 rupees, right? So you can make capital gains or losses in debentures. Plus, in equity, you'll get dividends. In debentures, you will get interest or coupons. So you get that steady stream of cash flows. In equity, you don't know whether your cash flows will be paid or not in terms of dividends, right? You don't know if the company is going to pay you back pay you dividends or not. Versus in debentures, you get this steady stream of cash flows because the company promises to pay you at a regular interval. And if you think about debentures and deposits, right, at a point where you're thinking about holding these debentures for a longer period of time, typically debentures are long term. Like I said, the minimum, according to CSE rules, is that the minimum period of a debenture to list a debenture on the Colombo Stock Exchange is 2 years. Most of the time, we see that companies will issue debentures from 3 years, 5 years. We've seen 10 years, 12-year debentures, right? In deposits, of course, you have, again, the same gamut of deposits. You have the 3-month deposit, 6-month deposit. Most of the time, I know if you think about your own investments, you will see a lot of people prefer short-term investing. I just spoke to you about why short-term investing is not a great thing, right? So short-term deposits are one, the most popular type of investments. And when you look at the long term, you have to be a little careful because you have to consider the AER. And let me quickly talk to you about that. So just before I come to that, though, just to say that in debentures, your liquidity is facilitated by the Colombo Stock Exchange because the debentures are tradable on the Colombo Stock Exchange. It is not highly liquid, unlike shares. Unfortunately, we still don't have a lot of people who trade a lot on debentures because I think there is a gap in terms of people being aware of the tradability of the debentures. But you can trade debentures on the Colombo Stock Exchange just like shares. And but versus if you think about a deposit, again, you might have liquidity. You can easily premature the deposit, but there will be penalties that may become applicable. Deposits are regulated by the Central Bank of Sri Lanka. Debentures are regulated by the Securities and Exchange Commission, facilitated by Colombo Stock Exchange. Okay, so just in terms of the return potential I was talking to you about, I told you have to be a little careful about AER. You should consider that, right? So let me just show you a quick example. Think about a 5-year FD and a debenture, right? So you have the option between a 5-year FD and a debenture. You have investor X who's investing in this 5-year bank FD. He invests 1 million. At a 10% interest rate, he invests for 5 years. So at the end of 5 years, he's supposed to get back a lump sum at maturity, right? So at the end of 5 years, he'll get back 1.5 million because 1 million plus the 10% interest into 5 years, he'll get 1.5 million. On a AER basis, effective rate that he earns will be 8.45%. Versus when you invest in the debenture, you have you get your 1 million back at the end of the 5-year period. In addition, you get back so in this, my example, I've said your interest rate is again 10%, but here it's paid semi-annually, right? So 10%, that means 10% per annum, but paid every 6 months. So you get 5% every 6 months. So if that's the case, you get 50,000 every 6 months as coupon, plus you get the 1 million at the end of the period, end of the 5-year term. Thinking that you're going to reinvest this coupon, actually, you have the potential to make even 1.6 million, right? Depending on how, when, where, and you reinvest this coupon. I've assumed that you're reinvesting the coupon at the same rate. At the same rate, that means for every 1 million that you invest, you're making 128,000 more when you invest in the same type of investment. Both gave you a 10%, but you see the differences between the two types of investments. Now, this is actually a real world example. So if you look at, this was an example that I picked out from a bank that was offering a debenture recently. And the bank's 5-year fixed deposit is 10%. But actually, the bank offered the debentures to the public. If you look at their rates, right? The 5-year debenture was offered at semi-annual coupons and annual coupons. SA means semi-annual, A means annual. And these were the rates that were offered. Not only did you have 5-year options, you had 7-year options, you had 10-year options, right? So there were multiple options that you could pick or choose from. So just to summarize that bit, remember, fixed deposits are very familiar, easy to access, you know about it. I mean, that we've grown up listening about deposits, right? So by the time we are a kid, we have heard advertisements about the importance of saving. So we are very familiar with the fixed deposit market. Very low risk, low minimum investment. But if you try to withdraw it before it matures, obviously you'll have to incur penalties. Your AER is something you should consider. Versus equity, you have potential for higher return. Right? I showed you the type of returns that you can make. It's a really great inflation hedge and easily accessible through the Colombo Stock Exchange. But with equity, you have to remember your prices can go up, can come down, and you need to make sure that you research the potential investments. With debentures, these are great for long-term investments, right? Because they pay a fixed interest rate over a long tenor. You can reinvest this investment. And again, you can invest through the Colombo Stock Exchange, especially at the IPO level. The minimum investments are for most debentures, other than certain debentures, 10,000 rupees. So for you have two types of debentures, what we call the Basel III compliant debentures, which have a minimum investment which is higher, which are higher risk. Therefore, they have a minimum investment which is higher. Versus you have the other debentures, which you can invest at 10,000 rupees itself. Again, remember, you need to make sure that you research because you're still investing in a company for a longer period of time. And unlike shares, you don't have voting rights, but you have priority in terms of claims in case something happens. Yeah. So just to finish off, I'll just take you quickly through the debenture trading ecosystem. Right? Anytime there is an issuer, they will come to the Colombo Stock Exchange when they want to raise money and they'll submit the debenture application. So the Colombo Stock Exchange would vet this application. They'll look through to make sure that they'll ask the company, what is the purpose? Or through the prospectus, you will see what is the purpose that that this company is raising money for. And we'll make sure that the financial statements are in the prospectus. So all the information is available to the investors to evaluate the debenture properly, right? And when the issuer does this, they submit this debenture application with an investment bank who would facilitate this process, would help them submit this debenture application to the Colombo Stock Exchange, as well as find investors. The CSC approves this listing application. The debentures would be issued via the CSC, and investors can invest in it through their stockbroker. Your money, your securities will be maintained with the CDS. to central depository systems. And whatever money raised goes back to the issuer. This is how the issuer raises money. Until this debenture matures 5 years later or 10 years later or whenever, investors can actually trade the debenture in the secondary market, right, among each other. This whole process is regulated by the Securities Exchange Commission, who is the watchdog for this whole ecosystem. Right? So this is something that I want to leave with you. And I'll stop my presentation there. Thank you.
Thank you so much for that valuable information, Ms. Jayasekara. We are delighted to present our next distinguished speaker, Ms. Kaushini Laksumanage, the Chief Operating Officer, NDB Investment Banking Limited. Kaushini brings over 25 years of experience in debt capital markets, leading transactions across debentures, hybrid instruments, project financing, syndications, and securitizations. She has been pivotal in positioning her division as Sri Lanka's market leader for the past 7 years and has introduced several firsts to the capital market, including the country's first Basel III compliant Tier 2 debenture, the first green bond for an NBFI, and the first social bond listed on the CSE. She holds a BCom Honours in Finance and Marketing from the University of Ottawa, Canada. Over to you, Ms. Kaushini.
Thank you, Tilani, and thank you, CAPM, for organizing this very useful seminar. I will share my presentation now. All right. I'll take you through the presentation. Right. I'll start off by talking about, since Vindhya already gave you a very descriptive description about some of the features about why you should look at debentures, I will also start from that point onwards. So if you look at list debentures, these are some of the features of debentures that you should keep in mind when you're investing in debentures. So one of the things is if you're looking at a listed debenture, then we are looking at it being listed in the Colombo Stock Exchange as opposed to an unlisted debenture that may be done by corporates, which is privately placed. Then when you're talking about the tenors of debentures are either redeemable with fixed repayment terms. So we have, as Vindhya mentioned, shorter end from 2 years and can go on to even 10, 15 years long term. And then we also have irredeemable perpetual debentures that not much has happened in the market, but there are a couple. These don't have a maturity date, and you have regular interest or coupon payments that you will be receiving on it. Then we have debentures that may have features of convertibility. These convertibility is specifically for debentures that are bank debentures where they're looking at conversion option, mainly to shares. I will talk more about it later. Then we also have the non-convertible debentures. And we have the ranking on seniority. So the senior debentures will be ranking senior to all subordinated, and they will be paid before any subordinated debenture. Some of the key issues we've seen in the recent past, if you take licensed commercial banks and finance companies, one of the main reasons as to why they want to raise funds is to strengthen their Tier 2 capital. And also some of them may raise senior debentures to increase their loan portfolios. Instead of raising taking a loan or anything from a bank, they may decide to go with a debenture option. for investors, this gives you there's a credit rating that is there. These are established institutions with a lot of governance and regulation. So you have the option of looking at investing in different types of debentures for commercial banks and NBFI companies. Of course, not all will be treated equally. So I will come to that later on in my presentation as to some of the things you need to keep in mind when investing in debentures. There are also corporates. And so before I move to the corporates, some of the recent debentures we've seen NDB Bank, HNB Commercial. So most of you have seen some of the Alliance Finance debentures, finance companies coming, Siapata. So there's been quite a lot happening this year. And we also have a very strong pipeline of debentures to come for the rest of the year. Corporates raise funds mainly to augment their capital growth. It could be for debt refinancing. So if a company has raised funds during high interest rates and they want to refinance it, they may use this as a tool. Also, this is giving the issuers option of non-bank financing where they can raise debt capital from the market. For investors, they also have the option of having not only bank funds, what do you call, as a diversification tool, they can use this. And also they have to look at the leveraging of this company, the cash flows, credit rating, so on and so forth when you're making that decision to invest in a corporate. Some of the traditional types of debentures we have seen are, as I mentioned earlier, also senior debentures. These are senior to all subordinated debentures. Then subordinated debentures raised by finance companies and banks. I will come to the banks later. Perpetual debentures are, as I said, debentures that don't have a redemption date, irredeemable. Guaranteed debentures are typically guaranteed by banks. If a company wants to raise a debenture to elevate their credit rating, because they don't have a high credit rating, they may decide to go with a guarantee from a bank because the bank credit rating will be then offered to the debenture. These are some of the ways a company can elevate the credit rating of the issue if they want to raise funds. Also, corporates can guarantee some of the subsidiaries. If they have a high rating, they may want to guarantee their subsidiaries debenture in order to elevate the credit rating of the issue. Basel III debentures are typically issued by banks, and the purpose of funding is to raise Tier 2 capital for the bank. These have to have a minimum 5-year period for redemption. It cannot be shorter than 5 years. And these are issued with the option to convert to shares in the hands of the regulator if there is credit quality of the issue has gone down and there is a requirement for them to convert it to shares. Of course, we have seen Basel III debentures since 2013, and to date we have never seen a situation of a conversion. So it's a feature that you need to have in order to take this instrument for the bank's Tier 2. Then we have secured debentures. We don't see too much of secured debentures in the listed space, but these are debentures where you can have it can be secured by a property, and then if there's a situation where the company is unable to pay, you can liquidate the property in order to pay the debenture holders. We are now seeing a lot of new debenture types coming in the market. Most of these we have seen in this year, actually. So the first green bond was done by DFCC last year, and then we've seen another green bond that happened this year for an NBFI company and also for a power generating company. Typically, green bonds are environmentally friendly. They are used for projects like renewable energy to reduce pollution, and they have very much a sustainable element in the objective of the fundraising. They have third-party verifications done on the objective prior and when the company decides to go for a green bond. So then on the other side, the verifier will verify that the funds used or raised through this debenture is used for the purpose that they have said in their objectives. Orange bond is mainly looking at gender equality and women empowerment. So again, here the qualifiers will have to get external verification done in order to be able to qualify for this orange one. And also, as I said, again, their purpose will be verified post issuance of the debenture as well. So the first orange bond is opening tomorrow. It's for Alliance Finance Company. The issue is for a 2 billion. And we hope that most of you will think about investing in this debenture as well. Blue bonds, we have not seen one yet in the market, Colombo Stock Exchange. These are dedicated mainly for coastal conservation and sustainable water management and that sort of thing. High yield bonds. High yield bonds. The first high yield bond was done by Fintrex in the Colombo Stock Exchange. High yield bonds typically have a rating of BBB minus and can go down to C. So these are more riskier investments for which they will offer a much more attractive interest rate than or a coupon rate than a normal debenture. So you have to, when you're investing in a high yield bond, you need to keep in mind the rating and what that denotes. Also that this can give you, most of the high yield bonds are done right now by finance companies. They're looking at raising funds for their tier 2. So you need to keep in mind the risk and the return when you're looking at high yield bonds. The first sukuk was also done this year. The sukuk is a Sharia compliant instrument that pays doesn't have interest payments, and it is done according to the Sharia laws, and the issuers have asset-backed structures. So for those who are looking at Sharia compliant investments, this is an option that you can think of as opposed to only putting your money in banks. Vindhya, I think, went through some of the comparisons between debentures and fixed deposits, but I'll just go through this section very fast. So typically, fixed deposits are licensed bank and NBFI companies, issuers, and whereas debentures can be corporates, banks, and NBFIs. Primary goal of a debenture holder can change and vary depending on the objectives that they have given. Like, for instance, if it's a green bond or a orange bond or a blue bond, then the purpose may change accordingly. And the nature of funds is you're lending money, as Vindhya also mentioned, to a company, whereas we are depositing money in a bank if it's a FD. Liquidity, it's tradable in the stock market, and there may be a lag because the secondary market is not as active as it should be. Whereas in the case of a FD, you may be able to withdraw it with some penalty interest payments. Collateral, some of the debentures may be listed, asset-backed, whereas or unsecured. Most of the debentures we see are unsecured debentures in the market. whereas in a fixed deposit, there is no collateral kept. Then the regulation is done through Securities and Exchange Commission and the Colombo Stock Exchange for debentures, and central bank for FDs and for banks and NBFI companies. For an application for a debenture, you have to have a CDS account, and you can do the investment. The application can be given to a stockbroker or an investment bank. Whereas for a FD, you just have to go and fill in the application at the bank. Some of the regulatory bodies of debentures, I thought we should look at this point. So the Colombo Stock Exchange, their main role is that the CSE enables financial institutions to raise capital through listed debentures, while ensuring regulatory compliance and investor protection. What does that mean to you? For listed debentures, the CSC ensures an orderly and transparent marketplace. It sets listing rules that companies must follow, and it publicly disseminates important information about the debentures to all parties, and everyone is given that information, and you will have access to that information in real time. The Securities and Exchange Commission, as Vindhya mentioned, is the watchdog of this whole process. The role is that the SEC ensures all market participants adhere to SEC Act, creating a fair and transparent environment for debt investments. What does this mean to an investor? It safeguards debenture investors by enforcing strict disclosure rules, and they go through all offerings for compliance and monitoring markets against fraud. It also educates investors about risks and rights, ensuring transparent and a fair debt market. The Central Bank of Sri Lanka, it regulates the banks and the NBFI sector in Sri Lanka. And how does that help in a debenture? When somebody is issuing a debenture, the central bank has also made sure that they have looked at the financial health and stability of that company. This is particularly important for like tier 2 debentures, where the CBSL role is critical to maintain the overall stability of the financial systems. And for Basel III debentures, the CDS, most of you may be already having a CDS account because you may be trading in shares. So it's the same CDS account that you will be requiring for your debenture investments. For those who don't know what a CDS account is, it's basically electronic fortress for secure ownership of and effortless trading of securities. So your debentures, once you buy it, will be deposited in the CDS, and it's instantly you can do transfers. It's very secure, and settlements happen within T+1 or T+2. So everything is very straightforward. Once you have given your account number to the CDS, then your interest coupon payments will be directly remitted to that account for your debenture investment, and your capital at the end also will be remitted directly to that account. And it gives a lot of transparency because it's all real time. The trades happen, and it's just like in equity, you have the ability to see your portfolio. For those who don't have a CDS account, to open one, you need your NIC, a proof of residency. Then they do, like for opening a bank account, you do the KYC profile, you have to fill in the CDS form with your bank account information. So the relevance of the CDS is for debentures is because you need to have a CDS account for you to be able to invest in a debenture. The client benefits the benefits to a client is because it simplifies management from their end, the issuer rather, when we say client. It's easy for them to pay the coupon payments and all that through the CDS. And then we have, for those who want to sell, even though there is not a very active market, this is something that everybody is working on to encourage to develop the secondary market for debentures. So you will have more liquidity, we feel, going forward than what we have now for debentures. So one of the things we need to keep in mind when we look at debentures is the credit rating. So the credit rating can be a AAA and it can go down to BBB for an investment grade debenture. And what does that mean to an investor? It means that the rating will indicate the repayment ability of that issuer. And you will have, once you look at the rating and what that denotes, you will have a good idea about the repayment ability of the debenture. Then for high yield bonds, this CSE has now allowed BBB minus going up to C rated debentures. These are typically on the lower end of the spectrum of the ratings, and they will have higher interest rates as a result. So for those who have higher risk appetite, you can look at high yield bonds in the Colombo Stock Exchange. I want to take you through a quick case study that we have done. So this was what we did last year for Hatton National Bank. The debenture was for 12 billion. The face value of the debenture was 100 million. And the units of debentures was 120 million debentures, giving 12 billion. The coupon rates, I will come to, and then it had varying coupon rates for varying tenors, and the tenors were 5 going up to 10 years. The issue rating was BBB plus. So Hatton National Bank decided to do this for their Tier 2 purposes. For Basel, it was a Basel III debenture. So the key features included that it is tradable on the Colombo Stock Exchange. It has lower priority than a senior debenture in the case of liquidation. Principal repayments at maturity. So here they had 5, 7, and 10-year maturities. It had the non-viability conversion, which means that it can be if there's a regulatory trigger, it can be converted to share. So the issue, if you look at H&B, the issue rating is A, but the entity rating is A, but the issue was rated BBB plus. This is typically a feature of a Basel III debenture or a subordinated debenture. The issue rating will be lower than the entity rating because this is going to be ranked lower when it comes to repayment than the senior debt of that issuer. So if you look at the interest rates here, we had 4 types. Type A was 5 years with annual interest of 13%. Now, last year this would have been, some people would have thought this is not a very good rate, but now in hindsight, this looks very attractive. Then type B debenture was again a 5-year with a semi-annual option of 1260, and then we had a 7-year at 1325 annual coupon, and a type E of 10 years at 13.5. So the issue was also we had qualified investors in this case. So that is, if you're a corporate, your minimum investment amount was 10,000 rupees. But if you are an individual, you have to have a 5 million minimum investment amount when applying for the debenture. This rule was brought by the CSE, and that is also, I think, one way that CSE wants to protect the investors when investing in subordinated debt, and specifically Basel III debentures. So this feature was seen in all Basel III debentures where you have qualified investors. In conclusion, as Vindhya said, we should look at maybe debentures as a long-term investment opportunity. It can give, if you look at some of the debentures like perpetual debentures, it can create your legacy investments going for your children from them to their children even. You have liquidity, and there is a lot of regulation coming in from CSE and SEC. So there is scrutiny when a company wants to do a debenture. You can take comfort from the fact that these debentures are in a regulated environment. I think that's all I have for today, and thank you everyone for listening.
Thank you, Ms. Kaushini. Let me move on to the next speaker. I'm delighted to introduce our next distinguished speaker, Mr. Nadun Jayatilaka, Managing Director, Nestor Stockbrokers Private Limited. Mr. Nadun Jayatilaka serves as the Managing Director of Nestor Stockbrokers Private Limited. He holds an MBA from the University of Wales and brings over 30 years of experience in the securities industry. Mr. Jayatilaka began his career as a trainee stockbroker at Lanka Securities Private Limited in 1991. After obtaining the trading member license, he was appointed as the first Chief Executive Officer of Nestor Stockbrokers Private Limited in 2006, a position he held until May 2025. Over to you, Mr. Jayatilaka.
Okay. Good evening. Tilani, thank you very much for the introduction. I think we are after two very informative presentations where I think a lot of features, benefits, and types are discussed about debentures. I think so. Everybody, I hope, would have got a good idea of a debenture now, and must be very eager to see how you can invest in a debenture. So my role today, I think my presentation will focus on how to guide you to get started, get going, investing in debentures. So firstly, I would say I will say there are two parts that I have identified going forward start investing in debentures. First part is the primary market to the initial offer, which was already explained, where a company will have an issue of debentures, and as investors, you all can go and invest in debentures at the primary market. So second one, the second option or the second path we can identify is entering into the debenture market through the secondary market through CSE. As the previous speakers have explained, the CSE offers the secondary market to trade on debentures. So you can enter through that also. And and invest in debentures. So I will take these two parts and explain and try to see how we can enter, how we all can get the benefits out of investing in debentures. For an initial issue, as a person who has never invested with Colombo Stock Exchange, if you have never invested in shares or debentures, first thing you have to do is you have to have a CDS account. CDS means Central Depository System, which is a part of Colombo Stock Exchange. So you have to open an account with CDS, and that could be done through a stockbroker. Like example, Nestle Stockbrokers, where I am attached to, we open CDS account for investors. So initial thing, the first thing for a person who has never invested with the stock exchange, you have to have a CDS account, and you have to go to a stockbroking company, and they will assist you to open the CDS account, and that will be done through a mobile app which is provided by Stock Exchange. And now, once the account is open, then you can apply for debentures at a primary issue. The issuer will be the company, and when the debentures are issued, you can submit the application, and the issuer will allot your debentures at the primary issue or the initial issue. So whatever the debentures, number of debentures allotted to you will be deposited in the CT account you have opened with the broker. So first you open the account with the CDS through a stockbroker. Then you can send the application at the time of the issue to the issuer, and then you will be allotted with the debentures, and debentures will be directly, the company will lodge or deposited in your CDS account. Once the debentures are lodged in the CDS account, the debentures will be can be kept in the CDS account till maturity or till the time you decide that you want to dispose. So when the debentures are in the CDS account, the interest payments or the coupon interest, what already I explained, the coupon interest will be directly sent to your bank account by the company. So the bank account is given at the time of you opening the CDS account. So it is the same bank account you will be used. If you are trading in shares, your dividend will be sent to the same bank account. So if you basically have a CDS account, you can apply for an initial issue. And one thing I want to tell you, if you have a CDS account open previously to trade in shares, then you don't have to open a new account. You can use the same account to purchase the debentures as well. And the coupon interest will be directly going into the bank account, which is given in your CDS account, like the dividends if you're trading in shares. That's the path from which you can enter into the debenture investments at the initial issue. Say that you, the second part that I want to show you is the secondary market. Other than the initial issue, the debentures are listed in the CSE or Colombo Stock Exchange. So that provides an opportunity for the investors to buy from the secondary market or sell in the secondary market. For that also, you need the CDS account, as I explained before. If you have a CDS account already in the CDS for trading purposes, you can use that, or you have to open an account with a stockbroker, as I mentioned in the last. After opening the account, you can consult a broker. Right? There are specialized brokers who are qualified to advise on debt instruments, registered investment advisors. If you visit even like our company, we can provide you in advice on that. So if you approach a broker, you can get their advice and you can decide when to buy and when to sell debentures in the secondary market. And whatever you buy in the secondary market also, your debentures will be deposited in your account in the CDS. And the same platform which is used by the brokers to trade on equity will be used for the debenture trading as well. And when debentures are traded, there are three main boards that we can see. One is a normal board, and there's a crossing board and the OTC counter for debenture trading purposes. But there are two settlement cycles you can decide on. Not like shares. Shares, there's only one settlement, that is on T+2. For debentures, you can decide whether you want to settle on T+2 or T+1. So at the time of the trade, you can choose the settlement. So settlement T+2 means trading day plus 2 days, 2 working days. So example, if you buy a debenture today being Wednesday, your settlement will fall on Friday. Even if you sell a settlement today, if it is T+2 or spot settlement, the settlement will fall on Friday. If you choose the term settlement, then the settlement will fall T+1. That means trading day plus 1 working day. So next working day, the settlement will be. So that means today is Wednesday, tomorrow will be the settlement. So basically you can choose on what is the settlement cycle you want to choose, and you can agree with the counterparty. So actually you can do a crossing if it is more than 20 million, and high yielding bonds are done through OTC board. So that is the secondary market transaction, the facilities offered by the CSC through the brokers. And let me take you through some benefits or advantages in trading in the secondary market. Firstly, if you have missed the opportunity at the initial issue, there's a chance that you can do your investment later. So same way, if you want to exit at a particular time without holding the debenture till the maturity, you can exit in the secondary market. By doing that, by having the facility to enter and to exit, there are benefits that we can look at. Now, I will take an example. Let's say you have a bond at a yield, higher yield than the market yield. Let's say your coupon rate at the issued coupon rate is at 20%. If the market rate drops to 15% interest rate, then your debenture will be more valuable because your debenture is offering 20% coupon, but the market offers only 15%. By that time, you can take a decision, okay, I'm not going to hold this debenture till maturity, but I will be selling this debenture in the market and taking a capital gain. So that opportunity you can take in the secondary market. As well as if you have not entered, if you have not invested, if you have extra, if there's investment to be done, you can always go to the debenture market and see whether debenture rates are attractive. So if there are debentures with attractive rates and tenors, you can choose a debenture and purchase it. So both will be available in the secondary market. So those are the facilities as well as the safety given by the regulators, because SEC regulates the market with CSC, as previously discussed by the two presenters. It's very regulated, so security is guaranteed. So I have taken you through the methodology to enter into the debenture market. So starting investing. So if you have any queries or any clarifications or need any guidance, please be free to contact me. Thank you very much.
Thank you very much, Mr. Nadun Jayatilaka. Let us extend a warm welcome to our panel moderator, Mr. Gayan Lakmal Alvis, DGM, Head of Investment Front Office, Selinco Life. Gayan is a chartered financial analyst, a chartered management accountant, a chartered global management accountant, and a member of the Chartered Institute for Securities and Investment. He holds a degree in physical sciences, an MBA, and an MSc in actuarial science. He is an associate member of the Institute of Bankers Sri Lanka and served as a chief examiner, marking examiner, moderator, and a visiting lecturer. Gayan currently serves as the DGM, Head of Investment at Selinco Life, leading a team which manages over 300 billion LKR. He also a member of the Investment Committee of Premier Wealth Management Limited, a unit trust regulated by Securities and Exchange Commission of Sri Lanka. Gayan is the immediate past president of Selinco Life Toastmasters Club. In his spare time, Gayan shares his knowledge on LinkedIn and Twitter, where he currently has over 17,000 followers. Over to you, Mr. Alvis.
Thank you, Tilani, for that kind introduction. Since we are a little bit behind time, let me straight away jump to a few questions. We did have some interesting and informative presentations, actually 3 of them. Let me start with few questions of my own. Meanwhile, this message is for the audience. You can send your questions through the chat box. There is a special user call questions. You can type your questions and send through that. We will try to, there are several questions already, but we will try to address as much as possible within the given time. So let me start off with Vindhya. Vindhya, you mentioned a nice quote. Save for what is around the corner, but investing is for the future. So Vindhya, with that, I think that sets the tone. That sets the tone for the entire session actually. So in your opinion, Vindhya, before making an investment, now we know debentures are an attractive asset class and investment opportunity. But if I am to make an investment in a debenture, maybe the one that opens tomorrow, or maybe I want to speak to Nadun and buy a debenture in the secondary market, what are the factors or things that I should look for? Or in other words, what are the variables that I should be mindful of? Vindhya?
Okay. So, when you're making an investment, the first thing, a few things that you have to look for. A debenture is you're giving a loan, right? So when you're giving a loan, you should be mindful of whether the company is able to repay the loan. So that's the first thing. That is what we call credit risk of the debenture. So one way that you can look at the credit risk is, like Kaushik mentioned, you can look at the external rating providers' rating that is given. So CSE requires that all debentures that are going to be listed on the Colombo Stock Exchange has a mandatory rating. So that's one way that you can look at what is the probability of this debenture being paid back. And another way that CSE also safeguards investors in that sense is that for most investors, the investable universe is the investment grade debentures, which are lower risk. If you want to invest in high yield debentures like Kaushik mentioned, then there are minimum levels that you have to invest 5 million minimum. So it's only open for accredited investors. So the first thing is you look at your credit risk. Then you have to look at the tenor. For example, I showed you a chart with one of the recent issues that we had. So that had a tenor of 5 years, 7 years, 10 years. Investors had the option of choosing between a 5-year debenture, 7-year debenture, 10-year debenture. You have to look at what is the tenor you want to invest, between a 2-year or a 10-year. You have to be mindful that your money to get back your money, you have to wait this 2 years or this 10 years period. Of course, you can look at trading in the market, but we all three of us, I think, highlighted that at the moment, the market still needs to build up liquidity. So therefore, it's not as easy as trading in, let's say, for example, any of the shares, any of the top shares that you think of. So therefore, if you invest in a debenture, you have to be able to also think of, in case you can't trade it, are you willing to hold it? But that's the reason why you think of investing. So that's a different discussion altogether. But whether it's 2 years or 10 years is something that you have to think about. When do you, if you're retiring or if you want to send your kid to for higher education or something, when do you need the money back? So is it in 2 years' time, 5 years' time, 10 years' time? Are you being compensated for the risk that you're taking? What are the returns that you're getting from this debenture? Kaushi mentioned the different types of debentures that are there. Low risk types of debentures like guaranteed debentures or secured debentures versus slightly higher risk debentures as you go along the spectrum, like Basel III compliant debentures. So for each of these debentures, nobody says don't invest. Understand the risk and ask for the higher return. So if the debenture is not offering a higher return that compensates for the risk, then that's something that you shouldn't be looking at. So these are a few things that you might want to think about when you're investing.
Excellent, Vindhya. I think if anyone wants to invest in a debenture, I think those are the key things that you should look at. And I should remind the audience that this is live streamed on Facebook and it's being recorded also. So next time when you are going to make a debenture investment, go back, play exactly what Vindhya said. And I think that will give you a good guide on what to and when to invest. So next, I would like to turn to Kaushi. So Kaushi, you had a lot of illustrative material which helped us to understand the different types and the varieties and flavors. But still, for me, I mean, I'm a little bit interested to know, Kaushini. Now, you mentioned debentures, which we have heard for a while. And then now we have high yield bonds, which is quite little bit, I mean, quite recently, which is, I would say, popular. Are all debentures high yield bonds? Or maybe all high yield bonds are debentures? Or are they just like totally two different families? Can you explain in a simple way for us to understand?
Yes, Gan, thank you. So if you look at debentures, we would like to, I think, keep the debentures to the investment grade ratings, which is AAA going down to BBB. And then if you look at high yield bonds, we would like to say the ratings will be BBB minus going down to C. So basically, the debenture and a high yield bond, the risk is not the same. If you look at the features of a debenture and a high yield bond, will both have capital repayments, coupon payments, all those things will be the same. But the risk you're taking on a debenture as opposed to a high yield bond here is not the same. So that is what, I think we have to keep in mind the rating of the issuance and the return that you're expecting for the issuance for it to make sense whether to invest in a debenture or a high yield bond.
Thank you, Kaushi. I think for all those Marvel fans out there, in one of the Spider-Man movies, they say, with great powers comes great responsibility. So I think if you are into high yield bonds, which has a higher yield, obviously by the name, I think it puts a great responsibility on the investor to research and understand and invest, because usually relatively higher yield means a relatively higher risk. Thank you, Kaushini. I have two simple questions for Nadun. Actually, one is from me and another one is actually from the audience. So, Nadun, the first question is, okay, I do have a serious account. I have some shares in it. Can I call you tomorrow and maybe buy a debenture to the same serious account? Or do I need to send a document or like make a change or sign something?
No, Karan, thank you for sending me a simple question. Yeah, definitely. You can buy debentures to the same account, and there's no need of a special account or a different separate account. If you have a CDS account which you have been trading shares in, definitely you can use that account for debenture purchase as well. It will be shown in separately to debenture shares, but the same account will be used, same platform. Only the boards will be different.
Okay, great. So Nadun, the next quick question is,
Yeah.
okay, shares, we know there is a cost in terms of transaction. There is a cost for the stockbroker as well as cost for the CSE and the infrastructure. The question is not on that because I think everyone is familiar and we are focusing on debentures. When I maybe do a transaction in the secondary market through you, how that cost comes into play? Is there a fixed cost? Is it known? How would you explain that to a simple investor? The transaction cost. It may be brokerage, and it may be something we need to pay to CS.
For the debenture. Yep.
Yes.
For the debenture transaction, there's a fixed cost of 0.02 for CSC charges. Other than that, broker rate is flexible. Minimum of 0.01, but we can negotiate to even 0. I mean, we can do a transaction without brokerage or with brokerage. That's for debentures. It's given. There's no fixed brokerage. The only fixed thing is 0.02 CSC charges. Not like shares. Shares, there's a fixed broker rate 0.64 below 100 million. So there's nothing like that for debenture.
So Nadun, when you say 0.02, say if I buy a debenture in the secondary market at 10.05, 10.05 will become 10.03 because there is this 2 basis point charge, right?
Yeah.
So
Plus,
relatively very
negotiated brokerage.
Minus the negotiated brokerage, but it's very, very tiny, right? So
Very tiny,
it's
very
not
tiny.
a very big cost.
Yeah.
Okay.
About a basis point or 2 basis points.
Okay, great. So maybe my next question, it's actually from the audience. I'm jumbling two questions together, combining them. Maybe Vindhya and Kaushini can address it. So both of you spoke about credit risk. And obviously in any instrument, there is a risk. There is no free lunch. Everything comes at a cost. Maybe from the CSC and SCC front, as well as maybe from the market discipline as well. How this credit risk, or in simple terms, the risk of default is being handled. I understand obviously there are no guarantees, like even in a fixed deposit, there is no guarantee. The bank doesn't guarantee, the central bank doesn't guarantee. In terms of debentures, are there any guarantees? We can't expect so, but are there any guarantees? And how the credit risk or the default risk is being handled? Maybe we can hear a little bit from Vindhya and then we can move to Kaushini quickly.
Yeah. So the credit risk, a couple of ways that we handle the credit risk. Obviously, it's up to the investor to figure out whether they want to invest in the debenture or not. But what type of minimum safeguards that we have put around this is, the first thing is, when you list on the CSC, if you're listing a normal debenture, it has to have a minimum rating 1 notch above investment grade. So that's BBB and above. That is just to allow a little bit of for the company, even if it goes through a little bit of difficulties and there is a investment, there's a downgrade, there is a little bit of space for the company. So that's one thing that we have done. And then for that, with 10,000 rupees, any investor can invest. But with higher risk debentures, for example, Basel III compliant type debentures, here again, we put minimum amounts. So those debentures for individual investors, only accredited investors can invest. And like Nadun said, you have to have a 5 million minimum to start investing in these debentures. Same for the high yield bonds. So like you were asking, all high yield bonds, high yield bonds are all debentures. It's just higher risk debentures. So therefore, we've again imposed a minimum. And if there is any change in credit rating, CSE requires that it is immediately disclosed. So you will see that any change in credit rating will be announced on the site at any point in time. I think these are a few things that we have done, because ultimately investors, it's the same way as shares, right? There is no difference between thinking about a debenture or thinking about a share. You're taking on the risk of a company and you're making an investment. So you have to do that due diligence in terms of whether you want to take on that risk and invest. And all that information is provided to you. So you have your quarterly reports, just like even if the company is not listed, their shares are not listed. If a company lists its debenture, all the corporate governance procedures are required. So your quarterlies, your annuals, all of these are available on the website for investors to look through. Kaushik, you want to add on to? You're on mute.
I don't think I have much more to add to what Vindhya said. So yes, I think there is no guarantee. I mean, if it's a bank guaranteed debenture or something, yes, there is a guaranteed Akmal, but otherwise, these debentures have the rating, and then you have to look at the rating and make your assessment whether to invest or not, and your return should be in line with the risk you're taking.
Okay, great. Thank you, Vindhya and Kaushik. So there's another interesting audience question. I would like to direct it maybe initially to Nadun. Maybe Kaushik also can add something on top of that. So I'm actually going to read the question out loud because it's very interesting. Any penalty for selling a debenture early? Any penalty for selling a debenture early? Nadun?
He means early before maturity, right? Must be.
Yeah,
The
before
second
maturity is
part.
like
Yeah.
if you want money before it matures.
Yeah. So penalties, if you are selling at if the interest rates you are holding is lower than the market rate, and if you are selling at a higher interest to a capital loss, you can take a capital loss, but there's no penalty as such.
Right, there's no penalty.
There's no penalty, but capital loss, so you can. That's all. I mean, the risk of losing the capital because if the interest rates have moved negatively.
Yeah,
Nadun,
I think they're comparing it mostly with the FD maybe. So if you immature FD, there is a penalty. So if you sell your debenture, then you're selling it to another investor. So the maturity of the debenture is not going to change for the issuer.
Yeah. And there's no penalty for the investor as well, Kaushi, because
I think maybe Nadun and Kaushini, like it's same if I have a bond which say I bought it about a year ago, 5-year bond maturing in 2029. So I can't wait till 2029, and now I want to get rid of it. Unlike a fixed deposit, you can't like premature uplift a bond or even a debenture. So only thing is I have to sell it to someone else. But since I bought it last year, I say hypothetically speaking, I bought it at 15%. But now rates are down. So the other debenture, who is the buyer, if he or she is willing to buy at 12%, it's not actually a penalty or a loss.
You're
it's
getting
actually
a capital
gain.
Gain.
Exactly. So maybe to summarize, it's not a penalty. It depends on the rate that I have purchased, and it depends on the rate which I'm selling. If the rate I have purchased is at least equal or more, it will be a gain. If the rate I am selling is higher than what I have purchased, it will be a loss. It is not something charged by CSC or the issue or anyone. It's just the market forces. You buy at a certain price, and then you have to compare at which price that you're selling.
And when you say rate, the rate prevailing at that time in the country, like interest rate.
Exactly. Yeah. It's to do with the market interest rates in the economy, which is linked, then which decides the debenture rates.
Yeah.
Okay, one more quick and interesting question. I'm going to throw it to all three of you. It's about taxes. So the question is, how would the taxation play in terms of coupons, in terms of maturities, and in terms of maybe capital gains in terms of a sale? How would the taxation would play here?
Right. So if you look at the coupons, the taxation would be just like in a FD. You at the time of paying off the coupon, there is a 5% withheld. And then based on your tax bracket at the end of your period, you will have to pay the taxes on your return. On the capital being returned, there is no tax.
So Kaushini, like in simple terms, maybe like the taxation is same as fixed deposits, right?
It's
If you get
exactly like
monthly interest,
FD.
you get
Correct.
so okay, great. Okay, that simplifies all. Okay, maybe we have time for one quick question.
Sorry, Gayan,
So-
let me just, I think
Sure.
that is for the coupons.
Mm.
Capital gains taxes are still applicable for any when you're trading it, if
Yes.
just like for bonds.
Yeah.
Okay. So that in case of a sale based on the gain, you
Yeah.
have to pay taxes. Okay.
Only-
Thank you, Vinda. Good
Only
point.
equity capital gains are not there.
Equity, yes, equity is
yeah,
tax free.
yeah, tax free.
But for investors,
So
that's a 10% for individual investors.
individual 10, corporate, I think now they increase it to 30.
30.
So a quick question maybe to Nadun and then maybe to Kaushini. Now, you did mention in your slides that when interest is due, it will be paid to my CDS bank account. So maybe Nadun, okay, is there any, like, say tomorrow I have a maturity of, let's say, 1 million, which is due. So do I need to do something? Do I need to call the issuer or do I need to send them a letter or do I need to call you or send you a letter or an email? How it would work? Like normally in a fixed deposit, maybe if I don't call them, the bank might roll over it,
Yeah,
maybe at the normal rate. So we are
That's
normally mindful and tracking our maturities.
yes.
In a debenture and maybe the coupon as
Yeah.
well as maturity, how it would play.
Coupon and maturity the same, Gayan. It will be the same way. There's no need to remind anybody actually, not the broker, not the company. The coupon interest or the maturity will be directly deposited on the day that given. So there's no reminders needed. Not like the fixed deposits. There's no rollover, right? At the maturity or the coupon on the particular day, it will be sent. And another thing, the company will be sending you a letter saying that the coupon interest has been deposited to your bank account with the WHC deduction. So, I mean, it's not that we have to inform, but the company will inform us if we have invested. So, not like a FD, definitely no, no reminders needed.
Okay, now that makes our lives much easier. Maybe Kaushini can like quickly answer. Now I have seen in some prospectus they talk about this 3 days. Say the coupon is due on, let's say, 1st September each year. But it also mentions that it can change by plus or minus within 3 days. If you can just explain for the benefit of our
Yeah,
investors.
so they have given the 3 days because when you take the list of debenture holders, the registrar will do the interest calculation. So for them to, I think, have some sort of respite, they have been given these 3 days. So you should expect in a debenture the return to be within 3 days of the actual issue date
So Kaushini, it's not a
or
delay.
maturity date.
No.
Yeah, it's not a delay because debentures, unlike fixed deposit, are tradable. The person who owned it today might differ from the one who owned it yesterday, and
Exactly.
also might differ from the who is owning it tomorrow. So because of this change, the systems and the people would need some gap, maximum of 3 days, to figure it out and make the payment. So it is known in advance. So it's not a delay. That's how it is supposed to be.
Correct.
Okay, great. So we had a excellent 3 sessions and we had some interesting discussions also. I think there's a nice saying, all good things must come to an end. So we are approaching the end of our panel discussion also. So let me ask this question. I want to throw it out to all the panelists. We can start from India, then Kaushi, and then maybe Nadun. If you have to give one piece of advice to a new debenture investor, maybe the person who is applying the debenture which opens tomorrow, or in any debenture. If you are to give one piece of advice, what it would be? Vidya?
I would think do your due diligence, but don't be scared to invest long term, right? Because you can't beat inflation without looking at a portfolio where you're looking at investing for the longer term.
I would like to say that you have to keep in mind the credit rating of the issuer and the return, so that you are compensated fairly for the risk that you're taking.
Yeah, definitely. I will go with what both of them said. You have to do your due diligence at the initial stage, as well as it's better if you can keep a track of the interest rate movements, because you can always capitalize on that in the secondary market. While doing the due diligence at the time of investment, if you can keep a track on what is the interest rate movements are, then definitely you can gain more from debenture investments.
Okay, interesting thoughts. So let me thank Vindhya, Kaushini, and Nadun for joining me for this panel discussion. I think there is a formal vote of thanks coming up. And I personally like to thank CAPM for organizing this interesting and valuable session and also inviting me to be the moderator. I think we had a great session. So I would like to thank again everyone for their time and pass the controls back to Tilani. Tilani, over to you.
Thank you.
Thank you.
Thank you, everyone, for the exciting panel discussion. It was very informative. Before we conclude, I want to share an exciting investment opportunity, as Ms. Kaushini also mentioned. It's just around the corner, the first ever social bond in Sri Lanka by Alliance Finance. You can earn 11.15% annually for 4 years or 11.4% annually for 5 years. And the best part is investments start from just 10,000 rupees. If you're interested, please feel free to call us, but don't delay because the closing date is tomorrow. Ladies and gentlemen, as we bring today's webinar on debentures as a wealth strategy, safe, stable, and smart investing to a close, I would like to extend our sincere gratitude to our distinguished speakers for sharing their valuable insights and expertise. Your contributions have given us a deeper understanding of how debentures can be a safe and smart avenue for wealth creation. A heartfelt thank you also goes out to our media partner Daily FT and in particular Mr. Nishta Kasim for their kind support in helping us take this message to a wider audience. And of course to all our participants, thank you for your time, engagement and interest. We hope this session has been both informative and inspiring, and we look forward to having you with us again at our future events. On behalf of Corporate Capital Market Limited, known as CAPM, thank you once again and have a wonderful day.